Good morning, good afternoon, and good evening to all of you beautiful, amazing listeners who have been gracing us with your presence for the past few days, episodes, weeks, months. I'm excited to have you come back here today to listen to an evergreen episode that we're so excited to put together for you. We're going to call this one How to Get the Perfect Mortgage Approval. It started with a conversation around the application process and why it's so confusing. It doesn't matter if you're an investor, if you're a real estate agent, or if you're in the industry. It's often confusing and there's so many questions. So we took the time today to bring you back to understanding every key component that you need to know. And again, if you have any interest in real estate, this is a must listen episode to understand the mechanics and then hand it off to the experts like our team. You're going to love this episode. I really do think so. Well, if you don't, then I'm sorry, but go back and listen to some other episodes. We've got some great content, and lately we've had a lot of guests sending us a lot of requests for old information, or I wouldn't say old, but previous episodes, and asking us questions. So if you just are new to the show and you're just joining us, make sure to go and look at our back catalog. We've got everything from real estate experts across the country. We've got investors, we've got ins and outs of down payments, hacks, you name it, all that kind of fun stuff. And we're going to continue to experiment with different ideas as we come up with more information on the show. Now, one of the things that keeps us going is these awesome iTunes reviews. So if you're loving the show, do the one thing for us that would matter today, which is to leave us a 5-star review on iTunes if you're loving the show, and send us a shout out. Let us know. This way we know that you guys are loving it, and it gives us that juice to help us reach more listeners to give more information. So this week we have a 5-star review from Liz and Greg. He says, best real estate, mortgage, and investing podcast out there. The boys on this podcast always deliver such great content that's easy to understand for the average listener. Great topics and guests, easy to listen to, and totally educational. I'll catch an episode on the treadmill, on the road, or even while chilling in the hot tub. It's that good. These guys put a lot of energy and effort to make this podcast great. Keep it up, folks. Hey, thank you so much, Liz and Greg. We appreciate you so much for listening to the show. We're going to make sure to send you a couple mugs and, of course, some coffee to thank you for the amazing review. If you could do one thing for us today and you haven't done so, please do leave us that amazing review. Shout us out on iTunes, on Instagram. If you have any more questions about getting financing through the team here at Thrive, just check us out online, thrivemortgage.ca, or at Thrive Mortgage Co. on Instagram. Anyhow, guys, that's enough for me. Enjoy the episode, and we'll see you around the bend. What's up, guys? You are listening to the YVR Remo Show, where we talk all things Vancouver real estate and mortgages, take boring topics and make them interesting. Make sure to stay tuned to listen to everything you need to know how to put cash back in your pocket, create wealth in real estate, and simplify the complicated. All right, boys, back at it for another episode. Last episode was such a banger, and we've had so many requests for more information as it comes down to how to get a perfect mortgage approval, how to acquire more real estate, and so much more. So then we're going to start doing these episodes that really just break down the different areas that you need to be thinking about in your real estate transaction so you can have success before you get started. We realize that now we're getting to a point, we've got so many amazing people listening to our podcast, across the country that are just getting started, are starting to invest in real estate, and or they tried to do it all on their own before and have gotten stuck. So you're actually at the perfect place if you're listening, when you're listening, because of course you're listening if you're hearing my voice right now. But before we get into it, let's get some reintroductions going on here, guys. It's been a long time since we've reintroduced ourselves. Why don't we do a little roundtable here? We'll start at Dean Lawton. Introduce yourself, my friend. We know who you are. Tell us a little bit about yourself. Did you sleep last night? What are you eating? Whatever.
I feel like all I'm doing is living and breathing loans. But that's pretty much it, man. It's been a busy market. It doesn't stop. And as of right now, we are in the thick of it. And pretty much, when you look at a day-to-day in our lives, it's wake up, have a coffee, and jump right into financing.
Let's get into it a little bit. Let's let these guys into a little bit of our lives and who we are. Dean, if you're down with it, tell us a bit about your family life, what you do outside of the office.
Yeah, I enjoy golfing. I enjoy spending time with my kids. I have 3 kids under the age of 5, so that keeps me very busy. And pretty much outside of work, I am either spending time with my kids or I'm on the golf course.
Kids, and golf. Love it. Hey, so if you made it this far and you're still listening, we're going to definitely get you some payback. But we think it's super important to hear more about the guys behind the scenes. Derek, let's get into it. Aside from the fact that the puppies are keeping you up all night, what's going on in your end of the world, man? Celebrating obviously a new child yourself.
I'll start by saying Dean left out that he's building a pool. So if anyone's around Langley, we'll let you know when it's done. We're all very excited for that. My name's Derek, obviously, and I've got a 6-month-old kid. She's crying in the background right now. I often have to text my wife to tell her to move to the other end of the house while we're filming these. Yeah, house full of dogs, chickens, cats. Also love golfing, like spending some time in the sun. So I'm a little upset that we're getting into fall, but it is what it is. The market's going to pick up, and just like Dean mentioned, right? It's been our busiest year, hands down, no question. Growth in the team, volume, everything you can imagine. So we've learned a ton, and the podcast has been huge. A lot of people ask me, how I feel about the podcast, and I think the best part about it is we go through so many different topics that we think we know everything about. And it kind of forces us to learn every single piece about every single topic that we talk about, right? So it just opens up these conversations that we never would have had prior. And that's what I love about it. Like, we get to have these conversations weekly. So hopefully everyone's finding value in these episodes, because we definitely are.
No doubt. And you left out the fact that you once had a famous cat with 65,000 followers on Instagram. And rest in peace, Mr. Magoo. 67,000 followers on Instagram. Rest in peace, Mr. Magoo. Had a funny mouth thing going on with the tongue sticking out. So everybody listening, go check out Mr. Magoo. He's still alive on the Instagram world. Love that cat. So, yeah. And then for everybody else listening, I'm Alex Mcfadden, and otherwise known on Instagram as The Mortgage Pug. And yes, I do have two pugs actually, and they are my babies, and they kept me up all night last night. So dog problems. So loving that life. We talk a little bit about our personal situations, living in Langley as well, and doing monster renovations this year. So I think that's all of us. And I'm excited just as much to go and spend some time in Dean's pool when he's all finished next year.
Yeah, I'm building a resort. I am building a resort in my backyard. That's the goal.
Future episodes and live streams from the pool. We're with some margaritas. We are looking forward to that. And I'm extremely, to your point, to riff on it, Derek, extremely passionate about the educational component of what we do all day. Never ever wanted to get into this business to sell people, but to educate people and build trust based on just being their guide to help them get through to the end of their journey. So this is super fun. And this episode today is going to be a great starting point. I know you've listened to and heard all about us in the past, but a great starting point to really build the foundation for your success, whether you're a real estate investor or you're a first-time buyer, or maybe you've done this a few times, but you're like, what am I even doing here? So an evergreen episode that shall live on forever. So we're going to talk about is really the perfect mortgage approval and what the bank's looking for on your application. Again, keep in mind that just because the bank's looking for certain things, it doesn't mean you can't get an approval. So we'll definitely preface by saying there's a lot of options for someone who doesn't fit the mold. But if you're trying to shape your application and just understand what ideally at least they're looking for on conventional lending, then this is a great place to start. And I think we'll kind of start off with the reason for this episode is because we take 10 applications a day sometimes, and we see so many common errors and mistakes, and most of the time it's just people just didn't know. And so it comes down to just educating you guys about the little tips that can help us help you get into it. The story really at the end of the day and kind of going forward right into this is that the story of your situation is so important to us. We want to understand the why. Nowadays, there's so much easy access to literally just going and boom, clicking on a rate hub or a website like that and getting a mortgage. But their actual funding rates in terms of the people that click there to actually get approved are extremely, extremely low. And a big part of that is, expertise. But the second part is because no one knows your story. All they see is what you input into your application. So that, again, another reason why a lot of people come to us to help them with that process. So getting right into it, I mean, Dean, you started us off here with what are you doing? What are the goals of what you're working for? Do you want to give us a little bit insight into why that's so important and what we're looking for here?
Yeah, what is the purpose? Like, be very clear on what is the purpose of this application for this approval. So, to your point, tell the story. Well, the story needs to start with a goal. And being really clear on that goal is what's going to help us tell the story. And so, it could be purchasing a brand new home for your primary residence. It could be buying a rental property. It could be refinancing to take equity out to buy another property. So the story can evolve, but it needs to start somewhere, and being really clear on the goal and what you're looking to achieve is crucial.
Where we're going when we talk about the purpose and the goal is that a lot of people start a mortgage application and they say that, we might be doing a refinance or we might be doing a purchase, and they just don't seem ultra clear on what it is they're trying to do. Am I trying to purchase a home for myself, by myself? Am I trying to buy a single rental property? And then what's next after that? And so creating a lot of clarity around your goals is so massive in building out your application, partially because you just need to have an understanding yourself. So when we ask you questions, it's helpful. But also just because, again, the lender wants to know, hey, why are you doing that refinance right now? Where's that money going? Are you doing investments? Are you not? So there's just so many key factors to know. And that's where the story comes in. Derek, you want to touch a little bit on that story piece in the application?
Yeah, it's huge. I mean, and that story piece relates to everything, right? Whether it's a previous separation, or maybe there's a blip on your credit, or something changed with your job, or like the purpose of the funds, like you mentioned, right? You want to pull out $100,000. If we don't explain that to the bank, red flag, right? Like, why aren't we telling the bank where that money's going? So the more information that we have up front, it just makes it so much more seamless as we transition through that approval. And we get calls all the time from people saying, oh, well, my bank gave me a pre-approval over the phone in 10 minutes. No documentation, no nothing. It was just an application, right? And I tell everybody, like, that pre-approval is wrong, unfortunately, right? And you're going to go spend weeks, if not months, looking for properties just to find out that, they didn't pull your credit, and they didn't run the numbers properly, and they didn't look at your T4s. So, doing all this extra work, and it's really not that much work, but going through this diligently from the beginning is so important to build that base of your application, because that's what is going to justify your approval eventually.
But also it's important to know, like, as much as you need to be clear on the purpose and what you're looking to do, planning is a huge part of this too. And an application does evolve, and we may get started with somebody and the story may change, and that's okay. Part of what we do is we build the story together based on a thorough plan, and somebody may come in the door looking to refinance and buy another property, and then realize that there is another strategy, there's another plan that may be better suited for them once we go through this. So being clear on the purpose is so important, but don't let that hold you up if you don't know what it is, right? Like, you have to start, and starting is planning, and that's how we can get to a point where we are clear, and we can help you with that.
The next question that typically comes up is around the timelines to getting started with an actual application or mortgage application. It's such a frequent question that comes up. Hey, I want to buy in 4 months, 6 months, 12 months. And a lot of times, actually, that goal timeline is extremely loose, but it's good to know what that is. When should you start your mortgage application? Guys, what are your suggestions when you talk to most people? I think there could be different answers, but let's roundtable this.
I typically say it's never too early, because, if someone says, well, I'm thinking I kind of want to buy in 2 years, maybe we start the application now and we realize that, like, hey, if you continue on this path, you're not going to be able to do what you want to do in 2 years. So you need to pay off this car loan, or, maybe you have a couple raises coming, or maybe we can work on a cosigner.
Yeah, I would agree. It's never too early, because it's all about back to the plan. I mean, to your point, we may realize that there are some blemishes on the credit. There are some things that we need to fix, and it's absolutely never too early. In fact, it's probably too late, and we need to start getting on the road to recovery and work on those solutions. Or maybe now is the time, and now you're not, it's that opportunity cost, right? Like the loss of opportunity, when, you could be sitting on the fence because you think you can't get approved, or you think you can't do X, Y, and Z, but really you can buy a property right now, and that property could appreciate significantly over the next 6, 12, 18 months, right? So
I love that word, and it comes up so often in real estate, and as real estate is an investment, both for a home and obviously financially. Opportunity cost, really good one. And to your point about when to start the application or not start the application, I think generally speaking, it's just kind of ingrained in people's minds that, okay, we get started right before we start shopping, or sometimes to your point, starting quite early. Where I think the confusion comes in is how far along in the application you should go. For example, maybe we do an application with you, and after initial assessment, we say, okay, well, it may not be worth sending in the entire doc package at this time because we are 3 years out or 2.5 years, but we can have a 15-minute conversation to walk through that. A lot of the fear that I hear from people not starting their application is almost always derived from the same thing. I heard that from this person. Like, I heard that I can't apply. I heard that you guys charge me a fee. I heard that, like, I don't know, if I can't get approved now, then I won't get approved later. It's just all these myths that we hear from people, and 99% of it is incorrect. But in addition to that, as everybody knows, or hey, maybe you don't know this, as a mortgage broker, we get paid when your mortgage funds. That's when it funds. So there are people out there in the banking industry who may not have that long sight vision. Thank goodness we help so many families. That's not even in our mindset at all. So maybe that's one of the things that's helpful from working with a professional like us and a team, is that we're not looking for the instant return on an investment. We're looking for, how do we help you, whether it is 3, 6, 9, 12, 14, or whatever months away, get in that position. And then again, that's full transparency. That's how the industry works, right? So with that being said, around timelines, at least get an application in, get a quick phone call in earlier than later, get some good advice. You can come back when you're ready. Moving on into, mistakes or not mistakes around the actual details of the application, I think will be really helpful for people to know when they're going through their approval process. Personal details, right?
Yeah, personal details, 100%. And just before we move on, I think like one of the key things to consider, and I know we're going to talk about this in the future in more detail, but just around the documentation and the details of, okay, who are you? Like, who are you? What's your name? It seems like such a simple question, but you'd be surprised. People remarried. People have different names because they immigrated here and they've changed their name to be more of a Canadianized name, or whatever the case is. And now we're realizing that, okay, well, we just used the name that you go by, but what are the mistakes there? Well, you don't exist. That person doesn't exist, and now there's no credit or what have you. Like, it's amazing how many times I pulled credit of a client that was remarried, and we have what's called a beacon reject, meaning like person basically doesn't exist, right?
Well, that's a good point, actually. Sometimes we put in an incorrect last name because that's what was put on the application, but there's no credit registered under that last name. Like, maybe you just got married, right? So we're running an application, and thankfully we're very thorough. If you're working with someone that wasn't, they might just say, hey, you don't qualify, you don't have any credit, sorry. And then you don't buy your house, right? Like, you're on hold, you don't know what to do. Whereas we'll have these conversations and figure, okay, well, you got married 6 months ago. What was your previous last name? We try that, and then boom, you got perfect credit, and it has all your credit history listed there, right? So something as small as that can literally jeopardize your application.
So, I mean, we could continue to get a little bit more into credit here as we go forward, but that is just like right off the bat, guys, gold nuggets right here. If your name didn't show up because maybe you entered in a different name, or the spelling was incorrect, or something of that nature, accuracy of information is so incredibly important. And I've seen this happen so many times firsthand, where somebody's credit didn't hit because Equifax has the information wrong, right? Or TransUnion, and they don't have it lined up. And so again, looking for that information and taking the time out to make the phone calls to the credit agency, which is something we've done so many times. Again, check your personal information, check your details, know your Equifax account, log on and check your own yourself is incredibly important.
One of the big things around accuracy on this information, such as like your previous address, having a full 3-year history of your previous address, it seems like, oh, well, why do you need to know that? You know what? That could actually hold us up from a lender perspective. Like, if there is an urgent timeline, we are working in a tight purchase subject removal, and we're missing like 2 years of your history. Like, a lender will say, hey, can you get this? And now we're following up with you, and you may be at work. So it's just like, just being super accurate and thorough up front will prepare you for seamless transaction going forward when it is time sensitive.
Yeah, I agree 100%. Well, let's dig a little bit deeper now into things like your income and history and what that looks like. So we've done previous episodes on self-employed income, private lending, and so forth. And this is a little bit of a trickier one to explain as it pertains to how you can get approved. But we can talk a little bit about what conventional lenders could be looking for in the actual application. Common myths or thoughts around building an application is things that you need to know is how long have you been at work? What is your work history and why? Honestly, even if it's an alternative lender or a private lender, often we want to know not just what you've been doing for the last 6 months. They want to know what you were doing for the last 3 years. Were you in school? Fill that information in your application. Let us know so we don't have to come back and ask you, right? Sometimes I hear people say, and actually quite frequently we hear people say, oh, I thought I had to be at my job for 3, 6 months, 12 months, 1.5 years. But I mean, put it in perspective from a lender's standpoint. If you're, let's say, a nurse, and you went to nursing school and you graduated, now you have a permanent full-time position. I mean, you're locked in. So 3 months on the job or 2 months on the job, that may be no issue whatsoever. But if we don't have that history or context behind to understand that you were abroad or you were in school or whatever that was, it's challenging to tell that story for you.
Absolutely. Or the fact that, you may be part-time and you were on mat leave last year, as an example, right? And what does that look like? How are we verifying your income? How can we use a 2-year average? Is a 2-year average even make sense? Or are we using a guaranteed income amount? These are all things that are so important that, you may be filling out the application and not know what to actually put there. But once we get the documents, and again, we'll go deep on the documents, because that 1-minute approval at the bank where they didn't look at your documents, it's so vital, because we are getting those documents and we're changing this information. That's part of the underwriting process. We're, again, now starting to manipulate the story based on facts, and facts are backed up with the documentation. And it's so important that we look at those documents and verify income correctly, because we could be making a plan that makes no sense and it's not going to work, right?
Like, I actually tell everybody not to stress the application. Like, you could put $1 in there for your income when you're filling it in. Not that you need to, but we're going to change it and we're going to figure out what income's justified, right? The biggest thing I'll say about income, because there's so many myths out there. I actually had a really good realtor, long-term realtor. She's been doing it for a very long time. She was under the impression that an employee, someone working for a company, needed to be there for 2 years before they could apply. Right? Like, there's just so many little myths out there. And if you're unsure, like, we will figure it out for you. Right? There's so much variance in income. We can get exceptions from banks, even if it isn't standard. Maybe it doesn't technically fit under the guidelines, that Scotiabank offers. But if we can pitch a good story because we have the information, like the mat leave, or that you were traveling, or, you're caring for somebody that was sick, so you took a year off. Like, if we have this information and we can justify it to a bank, we can often get them on board. So it's really, it's not cut and dry. It's not black and white. There's a lot of work that goes into it from our side. So yeah, the more information, the better when it comes to filling in the application and paperwork.
Yeah, give us the history, give us the story. We'll work on that for you. But this all leads back to, again, your detail and filling out. I know it sounds kind of corny, but literally filling in the application or information, or again, sharing with us the details to get there. Kind of, jumping into some other parts that we see all the time when people are building out an application and trying to get approved for a mortgage, around co-signatures. We'll get into that before we get into the location, but co-signing or co-applicants, we've done episodes on this. I think we're going to have to revisit this again in a future episode, just because it's so prevalent and there's even more questions that we haven't answered yet. But co-signing, what do I do for the application? Does everybody see my information? How many people can I have on the application? I'll start off right away. You can have typically up to 4 applicants on a mortgage application with most lenders. I mean, there's a few very minimum exceptions on how that works, but generally, if you're using someone's income, a bank's going to look for a maximum of 4 for a residential mortgage application. So when you're doing that, it's very important for us that you try to put everyone, if possible, on a single application. Now, there are some privacy questions that people ask around, maybe I don't want my family to see every single detail. Personally, my feedback around this is, if you're getting into a situation with someone where you're sharing this big of a financial resource, you should probably be comfortable with sharing quite a few personal financial details with those individuals. And again, that's just my feeling surrounding it. Otherwise, you're trying to attempt to hide information. But again, your feedback there would be, again, have everybody on the application and talk in advance about your financial situation, so it doesn't come up throughout this process and, get frustrated or stressed out about it?
Yeah, I mean, I would say one of the most frequent questions I get when somebody's considering bringing on a cosigner is, what does the process look for my cosigner? And the answer is exactly the same process you just went through. It's the exact same. They are coming on the application, and we are treating them exactly the same way as you. When we go through the process of building the story, the application, and getting all the documents, it is identical.
Just imagine that you're buying the house with this person.
Yeah.
You quite literally are buying the house with them. They're most likely going to be forced to be on title. They're doing everything that you're doing. They're going to the lawyers. They're signing the paperwork. They're liable for the mortgage, right? So another thing that comes up all the time with co-signers is the process and the paperwork that's required. A lot of people, maybe parents are 60 years old, not as tech savvy. Their last mortgage they probably got 20 years ago. It's a more tricky and difficult process for a cosigner. We typically see, a little bit of older people struggling with that side of things. So we like to have a conversation with them. Like, I like to get everybody on one phone call so we can introduce ourselves, explain the process. It's just typical for that age group. People want to go to their bank. They think it's easier. They think that they know them at the bank. So that's a big part of adding a cosigner, is just having a very thorough upfront conversation about the process and what's going to be required.
So, I mean, that leads into a question that comes up all the time, which I'm just going to riff on what you already said, is how do I fill out this application online, over the phone, in person, all that kind of stuff? I mean, COVID has fast forwarded everything these days. So typically we like to see most applications completed online, and it's not even that we want to. Most people want to do it themselves on their own time. Shift work, night work, kids, dogs, life, whatever, all these different things occur. If you want to do it at 4 o'clock in the morning, or if you want to do it at 4 o'clock in the afternoon, the online source is really important. And one thing in our business I know to be true is we've invested heavily in finding very good online software so that our clients can have a seamless experience. So uploading the documentation and filling out the application is really clear and obvious with little descriptions. But again, to your point, if you have someone who's a little bit older or a little bit unsure, can you fill this information out on the phone or in person? Now, we don't do in person anymore, taking kind of that part out of our business for the most part, with some very unique circumstances that we make some exceptions. But you can have the exact same impact or exact same effect doing it over the phone and having someone guide you through it and so forth. At Derek's point, one of the biggest challenges that we see often is if your grandpa's co-signing, or in some cases your parents, they're used to walking into a branch or a bank and telling someone the details face to face. You just don't have to do that anymore. You don't have to inconvenience yourself. You could be in California, or you could be in Europe, and fill out the application. Again, just something that needs to be said because it comes up all the time. Where do I need to be?
I mean, it's also really important to understand that, back to your point around software and how we invest heavily in that space, is around security. And when you're putting this information online, it's extremely secure software that we're using for really the main purpose is to protect you. And when you're uploading those documents, which again we'll talk about later, but the document portion, like sending documents through email, is maybe not the best bet from a security point of view. So having a secure place to deal with these items is really important, and we take that very seriously.
Yeah. So pushing forward throughout the application, we talked obviously about timelines, people, information, all that kind of stuff. I think the other piece is the property that we're going to get into, the property and location. And so this should not be the last because it's the last on the application, but this is the last because it's the most important. So property and location are those two are the absolute most important. So I think to put some context to the listeners in place, the bank is qualifying you to make the payments, but they're actually qualifying the property for foreclosure reasons or resale reasons. And that is the collateral. That is the number one thing that the bank or the lender is looking at, is the actual property that you're financing and the location of that property. It couldn't understate it anymore. So when we're building out an application, the only time we would typically have a specific property in mind is if you have an offer accepted, or if you're doing a refinance. But that is so important. Guys, we had a client situation yesterday where they were pre-approved for a property in the Lower Mainland, so Vancouver area, and they were searching for just your typical everyday detached home. And then next thing you know, we had an application come through the door with an offer accepted in Williams Lake on a unique, large acreage with outbuildings. It's not the same to a lender, and so it's important, and it must be said that banks look at that differently.
Well, so it's so true. And like, how many people do we pre-approve? You're pre-approved. Like you said, you qualify for X amount of loan based on the payment and, some estimated property taxes and what have you. And they go out and write a subject free offer because they think they're approved, right? But to your point, the property is so important. It's the most important part. It is the security for the loan. A lender's not going to give you $500,000 without security. And that is the primary piece of security, is that property. And they'll lend on it if they like it and they're comfortable with all these factors that we can get into, like, the condition of the home. I mean, you mentioned key reasons or key items like the property size and the location, but, what about the quality of the home? What has it been, was it built in the 70s and has it been upgraded since, the original owner? No. Okay. Well, what is the life of that home? Like, how long is it going to live in its current state? Like, these are things that could either kill your deal, meaning the bank says no, like, sorry, we're not financing this property, or it could impact how much you qualify for. So you now no longer qualify for $500K, you qualify for $250,000 because the home only has 20 years left in its life, right? These are things that are looked at. It's more than just the value and the location. There's a lot of items there, and when we get into strata properties, and that's a whole nother ball of worms, man. Like, you're looking at contingency funds. What is the condition of the building? Do they have enough money to keep it maintained and fix the future repairs? The roof that needs to be done in 2022. Like, all these things are so important, and that's why it's so important to ensure that your lender is reviewed that property before you ever remove subjects.
If you're actually going to write an offer on a property, let us know. Send us the listing. Realtors, shoot us the listing, ask us if the property seems okay, and we can do a bit of research. I mean, sometimes when we pre-approve somebody, it's based on one single lender, because that one single lender has a really good program or policy, or they use a lot of rental income, right? And maybe that one single lender won't finance in that location. We had a client bought a property up in Penticton. He wanted to do 20% down. Sure enough, the bank that we wanted to deal with, because it was Penticton, they considered it rural, and they wanted a little bit more money down than 20%. Client didn't want to do that, right? There's just so many situations that you just don't really think about when it's, you find the property you love and it's just game over from there. You want to make it happen. And then you find out kind of the downside, that the stuff that can come up in financing afterwards.
Well, you can hear the emotion in the voice here. This is a hot topic. This is something that comes up so often.
I would say one of the biggest ones that's come up, not so much anymore, but in the past, was previous grow up, right? Like, the people that wanted to buy this beautiful home that was $100,000 under market value, but it hasn't been on the market for 70 plus days or what have you, and it's a previous grow up. And I mean, you literally just crossed off almost every single institution in the country will no longer finance that property. I mean, there's a couple that will do it, but they're going to be higher rates. You're not going to get your best rates that you're seeing online or on the news or on the radio. It's going to be a premium rate, and you're going to have a very, very small selection of lenders to lend on that property. So I'd say that one is like so important.
Property, location, history of the property, and that rounds out kind of the end of the main portions of the application that you would be seeing on a regular day-to-day basis. So a lot of points throughout there that people can trip up. Again, as you can tell listening to this is why you want to work with an expert here in what we do, because we're just talking and riffing on this stuff as we go through the conversation with y'all. Listen, I think we should cap this one here, because we got some more parts of the application process for the perfect mortgage approval that we can get into, talking about, obviously the documentations that lenders are looking for, and then finally the actual submission process. What do you guys say? Do you want to cap this one and then we'll move on to the next one? Or any parting thoughts?
I mean, parting thoughts would just be I like, to your point, the passion in this part of the process, the story, like the property, all these things. We do take it very seriously, and we are passionate about it because we want to set our clients up for success. And the best way to do that is be fully prepared. And I think, to your point, where we go from here, well, why don't we get into the documentation? I mean, maybe that's the next one we do, but there is a lot to the story, and being prepared is key.
Yeah, my closing thoughts would just be around transparency. We're here to work with you guys, right? We work for you. If you've had a blip in your credit or a change in jobs, or there's something you don't think you should tell us, like tell us. We'll help you guys work through it. We'll figure out a way to work that into your application. The unknown is scary for us, right? Especially with markets like this where people are going subject free. If there's something that we don't know and it comes up after the fact and you've committed to buying a property, it's out of our hands, right? If we weren't aware of it. So just let us know anything and everything, and we'll help you through it.
No doubt. Transparency, sharing good information, just being honest. Like, we can help you if you help us through the application process, and we're going to crush it and help you guys get approved. Make sure to leave us that 5-star review if you made it this far. You're loving the episode if you made it this far. And if you want to check us out or work with us, find us on @Thrive Mortgage Co. or at the YVR Remo Show on Instagram. Give us a shout out. We'd love that. We'd love to help you or anybody else And we'll see y'all next time.